Hello everyone. Thanks for tuning into BLISSTRADES Technicals. In the last video, I had spoken about an intraday 15-minute strategy which would have made some good money if used consistently. I will obviously in due course update that video with some more examples. In the fag end of that video, I had spoken about position sizing as to how many shares to be bought when a trade has been generated for a buy all or sell. In this video I am going to take that concept a bit uh, ahead and tell you about two systems or the two methods which I use for position sizing. One method I use is for the intraday trading, and the second method which I use is for the positional trading. So first I'll cover the method which I use for the intraday trading. So I'll go to the Tata Steel example which I had took. So okay, by the way, those who have not watched my previous video can go and watch the video. The description box has the link to it. So for Tata Steel, first 15-minute high and low are marked, and here the high is 682.80, as I said, 682.80, and the low is 675.15. 75.15. So the risk for this trade is 7.65. Now, how do I position size? What I do is I divide my capital into two parts. So, for example, if I have 3 lakhs to trade intraday and I have two trades to make on that day, I divide it into 1.5 lakhs each. So, in this case, my position size for Tata Steel would be 1 lakh 50,000 divided by close price of the first 15-minute candle, that is 675.25. 75.25. So here in this example, my position size for Tata Steel would be 222 shares. So my max risk is going to be 222 shares into 7.65, that is 1699, right? So before entering the trade itself, I know that 1699 is going to be my max loss. Now, this position size will also depend on the capital which you have. Suppose I have only one trade and I decide to uh, take it wholly with 3 lakh capital. So 3 lakhs divided by 675.15. So these many shares, obviously the double would be my position size. So this is the way how I do position sizing for intraday trading. The next thing here is I do a method of daily compounding for intraday trading. So for example, I have traded 222 shares of Tata Steel, and at 3 p.m. that day the close was at 651. So presume that I close my trade at 652, and the close for the 15-minute trade was 675. So 675 minus 652, 23 points into 222 shares. So I make 5106. So I make 5106 on 1 lakh 50. So what I do is the next day my trading capital I increase. Obviously the trading capital in my trading account would be 155106. That is my profit added to the 1 lakh 50,000 if I'm trading with 1 lakh 50,000. So the next day also, if I have two parts of the trades, so for the Each part I will trade with 155106. So in this way, what I'm doing is I'm doing a daily compounding of whatever balance I have in my trading account. Same with the loss case. If I make a loss, then for example in this trade, if I lose 1550, so minus 1,50,000. So this would be my capital for one portion of the trade for the next day. So I will be trading for 148,450 divided by whatever stock I choose, and whatever price it closes, at the end of the 15 minutes. So for turtle steel example itself, if the next day price closes at suppose 627, so I'll divide this part by 627. So these many 236, 236 would be my position size for the trade for the next day. So this is how I do position sizing for trades which I take up in the intraday trading. Now the second question is how I go for positional trading, position size. So again I am going to tell you about the cash stocks position sizing, and maybe in some another video I may tell you about how I do position sizing if I go for futures. So for position sizing, when I take stocks for and hold it for some time, I divide my capital. For example, this is only an example which I take. I have suppose 5 lakhs of capital for position sizing. I risk not more than 3% of this trade. So to 0.3. So 15,000 would be my capital for that one trade. So let me just cross check. Yeah, 15,000 would be my capital for that trade. Now how do I position size for 15,000? For example, I buy DCB which is priced at 195 now, and my stop loss is 185, that is 10 bucks. So how I position size is simple. I divide 15,000 by 10 rupees, that is 195, minus my stop loss is 185, 10, sorry, that is 13 bucks. So I divide 5 lakhs, I divide 15,000 by 13, that is 1153 shares. So these are the number of shares which I buy of the share DCB if I am taking it to a positional trade. That is, I am carrying it for more than one day. So I'll again try to explain you with Excel. So what I do here is I have 5 lakhs of capital. Right. I will not trade the whole of 5 lakhs of capital. I trade only 3% of it for every trade which I get. So the 3% would be 15,000. My buy price is at in this is 198, and my stop loss is at was 183. Right. So that is here in this case it is 15 bucks. So you subtract this minus this 15 bucks. So my position size for this trade would be 15,000 divided by my stop loss. So 1000 shares would be my stop loss. Sorry, 1000 shares would be my position sizing for the trades which I take on a positional basis. That is, I buy and hold whenever my target achieves, or whatever the case may be, it may hit the stop loss also. So I'm keeping this video short. These are the two ways by which I use position sizing to trade intraday as well as positionally. I will definitely add to this video wherever I feel that I am finding some other way to position size. Then obviously I am going to upload it on a different video. So I feel that you have found value in this video, and if you have any comments, do leave it in the comment section. So thank you for tuning in and have a nice day.